This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. We are seeing kind of a choppy trade develop here in the corn market. If you look back over the past couple of weeks, we really haven't gone anywhere too fast, holding key technical support near 371 to 375, but failing to get out above resistance 382 to 384. We continue to be optimistic this market, but need to see a fundamental catalyst to give us that technical move and find new direction other than sideways. So hopefully we can make some sort of headway with regards to trade and get that breakout above 382 to 384 and really encourage additional buying to step in from the funds adding length, as well as potentially some short covering from those looking to the short side. Now over on the soybean side of things, same type of deal. We've kind of been making higher lows but lower highs, going into a wedge formation, and typically this means we're looking for a bigger directional move. On the upside, 921 3/4 to 927 3/4 represents the January highs, 200-day moving average, Fibonacci retracement, and trendline resistance from the December highs. If we can get a conviction close out above here, I think this market has another 20 cents of upside. Now, one of the key factors in this potential technical breakout setup is going to be trade negotiations with China. We know that we have a meeting with them next week. We're not expecting to get a solid concrete deal done, but if we can continue to take steps in the right direction, I think this market has room to work further north. On the support side, $9 is obviously that psychological level we're keeping a very close eye on. Now, wrapping things up with the wheat market, wheat had a very constructive close yesterday, closing towards the top end of the range and making new recent highs, but really lacking follow through here in the early afternoon session. 521 to 524. This is previous resistance, now becomes significant support to wrap up the week. If the bulls can defend this, they remain in control, and I wouldn't be surprised to see additional short covering from the funds take us closer towards 540 in the next week's trade. However, if we start breaking down below that into the weekend, it'll neutralize our position. We'll wait for a better setup to look to the long side. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.